Well, hello everyone. Welcome to Building a Stock Portfolio. I am obviously not Mr. Kevin Horner, but I have the privilege of filling in for him today as he is traveling back from a 2-day event in Boston. First time we've been in Boston. So here that was a great success. So anyway, today we're going to talk about, you know, different approaches to building a stock portfolio. And I thought that today we could have a conversation around sector rotation. And I know when I first was introduced to the world of investing and trading back in 2011, I mean, I'd been investing, but I delegated that to someone, since I had my first full-time job. But this whole question of building a stock portfolio was a really valid one, and I kind of wrestled with how to allocate my resources. And although, we're going to you can go to a variety of different webcasts and get different opinions. I love this concept of having a class dedicated to this. So I've got Connie Hill with us in the chat. She has been a coach for a couple of decades, and I've learned a lot from Connie. She's a friend and a fellow coach. So if you've got questions, please don't hesitate to ask. You're going to want to follow Connie on X at Connie Hill CS, and follow me on X as well at Barb Armstrong CS. I'm also now on LinkedIn, so you can wander over to LinkedIn and find me there as well. Just keep in mind that, everything that we're discussing in this class is for general information and educational purposes only. We're going to look at a lot of different stocks today and a lot of approaches, and, it's good food for thought, but not to be construed as a recommendation. The example trades that we will look at that are in this portfolio and the example trades we'll place on the Paper Money software application on the Thinkorswim desktop platform. And it is a brilliant place to learn and hone your skills before you consider trading in your live account. One of the things to keep in mind is that even if we put a stop order in place, if it's a stop market order, it doesn't guarantee that we're going to get out at the price requested. So we've got to keep that in mind as well. Yeah, if we sell a covered call on something, and that's about the only option we're going to consider in this class, at least today. Know that in Paper Money, short options like a covered call will never be assigned early. In Paper Money, that can happen in a live account. Okay, just so you're aware of that. And I got introduced to this world of trading and investing through a live event. And if you've never been to a live event, the next live event is happening in Chicago. It is a one-day market drive. It is free to attend. There's actually one in Santa Clara at the end of May, and you don't see this on the chart because it's already fully booked. So if you want to come to one of these, they are free to attend, but you have to register, and they are very popular. So we often get maxed out on space. So sign up now. You can always cancel your registration if in fact you can't come. But this one-day market drive, it goes from what's happening globally or geopolitically in the world that might impact the markets to what's happening within our country, to a look at sectors and sector rotation, and then a look at individual stocks. So we come a long way in a short time in one day, and we'll have the coffee on, we'll provide breakfast, lunch, and even a great reception at the end of the day. And I will be at the Chicago and San Diego events in May and June, at the Santa Clara event also. So if you're there, would love to get the chance to meet you. Come on up and say hello. Yeah, and then next week there is a virtual event on technical analysis. And so if you're interested in that, and let me just point this out, for those of you who are newer, if you come to schwab.com/coaching, and then you're going to want to come to live webcasts and virtual workshops. And for those of you for whom it's just not practical to be able to attend, I'm going to, unhighlight the webcast. You can see that next week, starting at 5 p.m. Eastern until 6:30, we've got a 4-day technical analysis workshop happening next week. Okay. And so that's another way to get kind of an in-depth introductory overview to some really great content. Alrighty. Okay, so let's come and look at the Thinkorswim platform. And when you first open your Thinkorswim and come to the monitor tab, you're going to have like all your positions in one group. And what I have done, and I recorded a little mini session on how to customize your monitor tab, but like I have two positions here where these are stocks that pay a dividend. And I just want to remind myself of that. And then I was able to customize and add dividend yield to this category. I also added sector so I could see what sector these were in. And you can customize, if you want to add sector, you just type in the word sector and then add that. And then you can have it show up. You can move it up or down. Now I've already got sector in there, so I'm going to remove it. And you would do this by group. So we have two stocks that pay a dividend, and one is in healthcare, the other's in consumer staples. Now, the other thing we can do, these names, we can drag these over so we can see. If I click on this bar here, I guess I have to click this way. So I can see the name a little easier. And again, you would, you can organize these or click and drag. So I have one that I put in my growth stock category, and that is Intel, and that's a tech stock. I had a group, I just kind of tongue in cheek said, this is my group where I'm trying to earn a little extra cash. So this is a stock with a target, I do believe, with Chubb. And if you say, well, that's kind of silly, I'm going to put this in my stock with targets group because all those stocks are part of my Paris for Thanksgiving or, new car group or whatever you want to call it. So we can move that back to our stocks with targets. And then I'm just going to delete that Paris for Thanksgiving group. So we'll delete that. And we can see we've got financials, materials, communications, and another tech stock. And then I have two buy right covered calls where we did this as an income generating strategy. We bought the stock and we sold a covered call at the same time. And here's Western Digital, and we're deep in the money on this. It's trading at 383. We sold a covered call at 330. We paid 266 for the stock. So are we sad that, we sold this covered call? Well, obviously we'd be up more, but we're up 24% on this position. So nobody is going to cry me a river if I say, darn, when we talked about this, we placed the trade here. We said, if it gets back up to around this 320 level, we'll be happy. Now, if this were in a live account, might we have been called out? We might have been. The closer we get to expiration, but there's no guarantee that we'll be called out. And so we could just close this trade, but when I ran the numbers, we could still make another $1,500 if we hang on to this. And given that we have over 300,000 of the 512,000 in this account sitting in cash, we could say, well, if this position could earn us another $1,500, maybe we'll just let it do that. So that's why we haven't closed that one out. Okay. Yeah, and Riceberg is saying, that he has multiple accounts and that having the groups really helps him review his position. So I find it makes it much easier to do my trade management. But if we had everything in one group, then I could maybe sort by sector. So yesterday I sat down because I knew that this was the topic I wanted to cover. And I said, okay, we have 11 sectors. You're saying 11 sectors. Can you just remind me of what those are again? Yes, I can. And I can do that by, we're going to bring up a watch list. Okay. And we're going to just bring up our sectors. Now, this is a brand new watch list. And so I'm going to customize this watch list. And I just did recently re-record how to customize a watch list. So I'm going to add 3-month return to this and 4-week return. I'm gonna make the 4-week return come first. And then because these symbols don't mean anything to me, I'm going to type in description and add description. And then I'm going to move that up. So this is a quick. Okay, so here's our 11 sectors. And the symbols, aren't so significant here. So here's our 11 sectors. And if we're saying, okay, which sector has been the strongest over the last 3 months? If I click on this 3 months, it will tell me, okay, energy's been the leading sector, followed by materials and then technology, real estate in number 4. But if we look at the last 4 weeks, has there been some rotation? Well, yeah, energy has gone from being number 1 in the hit parade to number 11, and technology is now back at the top, followed by consumer discretionary and materials. Okay. But and I went through and I wrote down all of the sectors where we had positions in this paper money account. And I'm just going to bring up my drawing tool here. Okay, move this. Yeah. So here's my drawing tool. So in technology, we did an example trade today. So we have 4 in the tech sector. In consumer discretionary, we have 0. In the materials sector, we have 1. So we've got 1 in the materials sector. We've got nada in real estate. We have 1 in communications. We have 1 in financials. How about industrials? None in industrials. Staples, we have 1. We have Coke, Coca-Cola. Utilities, nada. Healthcare, we have 1, J&J. And in the energy sector, none. And so if we look at this and we say, well, we've got 4 in the tech sector. Now keep in mind, 2 of that 4 are buy rights that there's a pretty high likelihood we won't own those once we, get to the May expiration dates on those. So we've got 4 positions there. We have nothing in consumer discretionary, and it's now the 2nd strongest sector. And so if we look at that, we might say, well, we've got some holes. Now, just because we have nothing in energy doesn't mean we want to add something in energy right away. Maybe, maybe not, but maybe we want to look more at consumer discretionary and materials where we have only 1 position. And so how can we then find, especially if you're new, it's like, well, how do I find then something, in the consumer discretionary sector? So a super quick way to do that is to create a scan. So I'm going to come out to a scan and I'm going to say, I want all the stocks that are in the S&P because those tend to be more heavily traded. And I want them also to be in the consumer discretionary sector, which includes automobile components, cars, household durables, hotels, et cetera, et cetera. And then I'm going to run that scan. And we can see that we've got 48 stocks that are in that consumer discretionary sector. And then I'm going to come up here and I want to save that scan and I'm going to call it sectors and consumer discretionary. And then save it. Now I've already done that. And if you don't want to come back and rewatch this whole thing, I did a short video that's in the trade management mini sessions on how to create sector scans very quickly. but I basically just showed you. And so if we come out here to sectors and then come to my personal list, we can see that, and the reason there's this, it looks to me like a dartboard, is that every time you click on this, it will run that scan and load the most current stocks that are part of the S&P and the consumer discretionary sector. And then we can just kind of start clicking along. And so that's what I did. And then if you link your chart to your watch list, you can just kind of come along and say, oh, okay, well, I see here that Ross Stores has been just uptrending nicely. And you might look at that and say, well, have we not missed the move? Well, hindsight's 2020, and don't we wish we'd all bought it a year ago at 130, but it's continuing to move to the upside. It's up 25% year to date. It pays a small dividend. And some might say, well, I'm not going to consider it a dividend stock unless it pays at least, 1%. Yeah, Wiley, I don't do a lot of scans, do I? I keep it pretty simple. Yeah, so, with Ross Stores, might we just consider adding this as a part of the consumer discretionary sector where we have a bit of a hole in our portfolio that's continuing to uptrend? And in this class, and I think Kevin works with a smaller portfolio for his examples, but we started the year at 500,000 in this class. And if we say we're willing to put up to 5% of our position, in any one position. So 5% of 500,000 would be 25,000. And if we say, okay, well, this is a $225 stock. So then I'm looking at, if we buy 100 shares, then we could sell a covered call on it, or a protective put come earnings season if we wanted to. And if we come out, we don't need so many for this class. If we come out and look, like, these are potentially tradable. Like, that's a 30-cent bid-ask spread if we wanted to sell a protective put, or, so if we said, well, we're going to buy 100 shares then. And where might we put a stop? Well, we might say, well, this 30-day moving average for the last year has really been acting as a support level, this red line. So I'm going to take this 216.82 level, and I'm going to put my stop, say 3% below that. So we're going to come here, we're going to right click, buy custom with a stop, and say, hey, if this goes below, what was the number? 210.32, we would like to exit. Now with position sizing, there's often two components to it. One is, you don't want one position to be half your portfolio value. But the other thing that you may want to think about is, well, if this hit my stop, and if I got out at the stop and it could gap down, we could end up out at less, how much would I be risking? Well, we'd be risking, let's call it, $15 a share, which would be about $1,500. And if we said, well, we don't want to risk more than half of 1% of the account value on any one trade, well, that would be about $2,500 on a $500,000 portfolio. So we would be, within the guardrails for position sizing on that too. And so we're going to put this in our stocks, our growth category. And the part of the reason that we came to this sector is because it's become a very strong sector. Like, if we come back to our sector indices, and if I click on consumer discretionary, we can see, it was pulling back and it's really started to come up, as have materials. Like, if I sort this again by month, So we're seeing materials kind of coming back around the bend. And of course, technology's been on the struggle bus since Halloween. And, and then we got to the end of March and, it's really been on a tear. Okay. So there's one example. Now, could there be another example in the consumer discretionary sector? So coming back to our consumer discretionary, another one that kind of caught my eye and I was just clicking through was Booking. Now, Booking, like a lot of other stocks in this sector, has kind of been on the struggle bus, hasn't it? Like it's down 10% year to date. But when we look at this, one of the things that we saw was, this MACD indicating, that, this is congruent with what's happening on the chart. We saw a 25-for-1 split. This used to be an extraordinarily expensive stock that a lot of traders might have felt they couldn't afford to maybe even buy a single share when it was 25 times higher. Like if we look at the price today at 190, and if I multiply that by 25, that used to be one share used to be $4,750. So, if my trading a smaller account, you can't have a position size bigger than 5,000, we could buy one share. But now that it's $185, it's in its snack bracket that more people could consider trading. But we have this, what we would call a cup and handle pattern kind of setting up, and then it's broken out above that. Now we do have earnings coming. And so what some might do is say, well, if I looked at this old ceiling or old resistance level, my expectation is that that might act as new support. This could be a support level. And if I said, okay, if I took 185 and I multiplied that by 0.97, that would give me a potential stop around 179.45. Now, why am I saying this? Like, so am I going to put a stop at 179.45? Well, earnings is next week. And what can happen sometimes on earnings is that, or it can happen on any given day, not any given Sunday. But, like we can have a candle like this where we have a stock that gaps, it opens low and we have this long wick and we end up out on a wick getting nicked out. And then it goes up and we wouldn't have ended up out at all. And that is so frustrating when that happens. And so sometimes people will use a stop loss most of the time, but when earnings comes, they'll take the stop loss off and they may or may not add a protective put. And when you buy the stock at the same time as you buy the put for protection, it's called a married put because we're marrying that put. We're not buying the put because we expect the stock to go down. We're buying it to define our risk. So if we do a put here, let's say we did a put at 180. So edit. And it's a protective put. So is that going to be free? No, we're going to have to pay for it. But what does it do for us? Well, it gives us the ability to sell the stock. So when I buy a put, it gives me the ability to sell the stock at any time between now and expiration. If earnings is the 28th, do I need a year's worth of coverage? No, I just need coverage past the 28th. It's like my son and daughter-in-law are going to Italy. And, my expectation is that they will probably buy some sort of short-term coverage that if one of them falls off the yacht they're going to be on and they break an arm or something, that they can get health care and they're fine. Now, the expectation is also that they'll get home and not have had to use that, short-term coverage that they bought. But they don't get to call that company and say, I want a refund because I didn't use it. Okay. But they're not going to buy coverage to last them for 6 months if they're only going to be there for 2 weeks. So we're looking at short-term coverage. And if we say, well, we don't need 24 days worth, we need more than 3 days worth because earnings is the 28th, we could come out to May 1st. And we want coverage. And the reason that these numbers are so weird is because of that stock split. When we get out to June, we see that the numbers, become regular numbers again. The reason these short-term numbers are kind of wonky is because of the stock split. So we wanted to put our stop around that 180 mark. So let's see, we come to 30, goodness, 40 strikes. So, that would cost us in that neighborhood, actually our original stop, but we don't have any contracts at this 179.20. At 180, there's 381. So we might say, okay, we'd like to buy 100 shares of stock. So we're going to come here and say we want to buy. So we want to buy 100 shares. And then we also want to come down here and make this first trigger sequence. And we're also going to buy a put. So we want to buy a put for protection. Now this bid-ask spread is kind of wide. So we're going to, go in and say, could we do this for, say 290? And, the way that some investors or traders might look at this is, now, no matter what, I have the right to sell the stock if it goes down at 180. So I'm defining my risk to $1,250 plus I've had to pay $2.90 a share, or 290. So I've got about $1,500 worth of risk in this. If I were to choose to exercise my right to sell it if it gapped down on earnings. Now, if it gaps up, I've made money to the upside, and chances are this will become worth very little. It will become worth less and very quickly worth nothing because we don't have much time in this. Earnings is the 28th, and this expires on the 1st. So we might get a few pennies back, but likely not much. So we want this to fill, and both of these we want actually both of these to fill tomorrow. Okay. And so instead of using a stop loss order, because earnings is coming up, we don't want to miss the potential move to the upside, but we want to cover ourselves to the downside from gap risk. So this would be in our growth stock category. And we're going to tee that one up. Now, when we looked at things, we had one position in the material sector. And so if we said, well, how about we come and look at the material sector? And so again, that would be our personal watch list. And again, you could probably set up all of these watch lists in about like 15 minutes, 10 if you're really clicking. This has no symbols. Okay, so I guess I need to redo that scan. So we're going to intersect the S&P with materials, scan. So we have 26 stocks in that. We're going to come up, save our scan, and this is sector materials. Save it. Do we want to rewrite it? We do, because the last one wasn't working. Okay. And so we're going to come back to our personal materials. What the Sam Hill? Okay, so let's save this one. Save scan. Okay, let's try this again. Oh, there we go. Okay, so I didn't get very far here before I found one, and Albemarle up 40% year to date. The position that we have in our account now is Freeport McMoran. And, so we don't already have this in our portfolio. It's been kind of consolidating a bit, a bit of a double bottom, broke out, came back to retest. And keep in mind, support and resistance. If you're new to technical analysis, there's a getting started with technical analysis on Tuesdays at 2 o'clock Eastern. But it looks like it's found some support and is bouncing. And a technician, they would look at this candle and say, oh, this is an inverted hammer. It looks like it may have found support here. I'm going to wait and see if the next day we get a close above the body of the candle of this day, and we have that. And so if we say, okay, well, you know what? I wouldn't mind. I've got still, 300,000 sitting in my account. We've put 2 example trades on that are 25,000 or less. But, we still have 250,000, half the account sitting in cash. So I'd like to, place another trade. Now, some might say, well, you know what? I'm going to do one as a longer term investment, because I think that this is a solid company and you may want to come and look at news on this company. We have earnings coming up, but just see what analysts are saying. So Citigroup has raised their price target to 210, B of A securities to 225, and so you can kind of scroll through and see what other companies, what the analysts are saying about this. You can come and look under the hood and if you come to the Analyze tab, we can see it's part of the material sector. We can see, what business it's in. We can scroll down and see, how their sales look and all that kind of good stuff. But if we're looking at this and we say, okay, we've looked at that, if you wanted to do my new car fund, one could do something even like a swing trade and say, I'm going to buy it. And when it goes up, to 215, when it goes up $17 a share, I'm going to sell it. And you might say, like, are you nuts? Like, why would you do that? Well, maybe you'd just like to make $1,700. Of course, if it comes back down, we could lose money also. Okay, but different parts of your portfolio can have a different purpose. And you might say, well, I'd like to put 100 shares in my, stocks growth fund. And then I like this swing trade idea that you talked about, where I buy it at the current price. And then when it gets up to 215.50, the previous high, I'm going to sell it and look to just make a short-term gain because I'm looking to generate a monthly income. And then that's in a different part of your portfolio. That's, in your stocks with targets portfolio. And the purpose, it may just be growth. You may not need the money, but you may say, hey, I've got a lot of my portfolio invested in things that I want to keep for the longer term. But this part, I want to make some money for me that I can withdraw and, take the kids to Disneyland or, whatever. Okay. So if we did that, if we said, well, here's our kind of resistance level and here's our recent low here is 193.50. So I'm going to multiply that by 0.97 and say, hey, if it goes to 187.69, I'm out. And I also want out if it goes up to 215 50. So I'm going to right click on this and say, I want to buy 100 shares, but with both a target and an exit. So if it goes up, or when it goes up, I always like to speak positively, but may never go up. If it goes up to 215.50, I want to ring the bell and take the money and run. And if it comes down to 187.69, I also, it's not going according to plan. And I don't want to turn this into a, hang on and start then being hopeful. Hope is a 4-letter word. Yeah, so this is how I'm setting my stop. And I just looked at the recent low candle and multiplied the low of that day times 0.97. And that's how I got my stop at 187.69. And then, so that I don't have to do the math at saying, hey, so what you've chosen for your target means if it goes up by $16, you're out, or if it goes down by $11.70, you're out. Yes, that's the idea. And this is a swing target. So if I'm thinking like, why did I make that my target? That's why. And once this order goes in, yeah, then you can see that. And then you might say, well, and then I'm going to leave the stop the same, but I'm going to buy another 100 shares and I'm going to just put it in my longer term investment. Okay, so we could do that as well. And right click. And we're buying custom this time, no target. And this time we have a different purpose. We just want this to be part of our growth stocks. And as long as it keeps going up, we're going to continue to own the position. 187.69. Okay. Now, how do you define keeps going up? I like that question. So we're teeing that one up. So one of the things that you may want to do, so let's take a look at one of our other growth stocks. So these two we've just put on, but Intel, like we're up significantly on Intel. We're up 56% since we bought it sometime this year because I reset this account at the beginning of the year. So if I look at this and I want to see my stop loss where it is in relation to, because my original stop on this was probably in the 30 some dollar range. So I'm going to come to the chart. I'm going to come to Intel. And I'm going to come to my sprocket. And some people may do this like once a week. Some people may do this once a month. Some people may never do this. So we bought it on this day and our original stop was down here. We've moved it up to here. And some of you may say, well, man, we're still leaving that at risk. And we have earnings on this on the 23rd. And so some might say, well, you know what? I'm just going to cancel this stop and I'm going to put a stop on after earnings because if it gaps down, I don't want to get nicked out. And then I'll put my stop back on. Some might add a stop, a protective put just over earnings. But if earnings is, well, it's Thursday, so, but now you have choices to make. But if you wanted to move your stop up to say, let's say earnings wasn't just around the horizon, you could say, well, the recent pullback came to about 62.20. You could just move your stop up like this and say, is that where you want your stop to be? Yeah. And now my stop has been moved up. It's that easy to do. And if you're saying, you know what, earnings is coming in 2 days, I don't want such a tight stop because things can sometimes, go a little crazy. And you might not want to do that, but now we've just canceled our stop loss order. And so, like if we look at this and if we look at Intel, let's say we had bought it a year or so ago, you might say, well, my rule says if it closes below the 30-day moving average, I'm going to move the stop up to 3% below the low of that day. Now, if it's a stock that tends to weave more, you may make that number 5%. Yeah. But you can have a trading plan, and how do you define break of support? And then move your stop up accordingly. So when we looked at this, in a class the other day and said, well, we bought it here, our stop was down here, and we don't want to leave that much risk on the table. Like a stock can always gap down exponentially, but what we're trying to do is protect some of our profit in this position. So that's how we'd adjust a stop. So that's a quick overview on using sector rotation to help you make decisions on which sectors to invest in and then which stocks to invest in. And we went over, as part of that, just to wrap up, how to add, as part of a group, how to add a sector to a group so you can determine where your investments are. We looked at how to create and customize a watch list, that gave us 3-month and 1-month returns, 4-week returns, so that we could see where sector strength was and where rotation was happening. And then we showed how to create a super easy scan so that we could then have a look at stocks within a sector, and that we could easily link our chart, to get an idea of, okay, is there an entry? And then we can, so I'm going to get rid of my show orders. Is there an entry signal showing on the charts? And then can we go do our homework to look at the fundamentals and what the analysts are saying and everything else. So I hope you have found this helpful. What I'd appreciate you're doing is, if you're not following Connie and I in the land of X, you're missing out. Connie posts a lot of great stuff. Connie Hill CS and Barb Armstrong CS. When I'm teaching extra classes, I post that as well. So you'll see a post first thing tomorrow morning that'll let you know that I am teaching 2 classes tomorrow that I don't normally teach. I'm filling in for Ben Watson for trading index options. And then I'm filling in for Scott Thompson. It's going to be the first time he's missed teaching his building a stock portfolio. So I'm filling, big shoes there for Scott. So, but I'll post that on X as well. Okay, so follow us on X. You can follow me on LinkedIn, Barb Armstrong. Look for me there. Hit the like button. It helps move things up in the algorithm so more people can find this content. It also lets Connie and I know that you thought that, what we were covering was valuable. And that's a wrap. So this is the end of our broadcast day in the webcast world. We'll be back tomorrow with Trader Talks at the opening bell at 9:30 Eastern. I hope you'll join us then. It'll be Kevin Horner and Brent Moores. Have a really awesome day, everyone. Thanks to Connie and the guys behind the scenes for all you do to help bring this webcast to life. And get out there and hug someone you love. Have a great evening. Bye for now.